If you just got a 1099 tax form in the mail and you're not sure what the heck to do with it, stay tuned. I'm going to explain exactly what's going on. Hey there, I'm Janet LeBlanc with Paper and Spark. I help makers and artists just like you start and scale online shops so that you can achieve your entrepreneurial dreams and hit your financial goals with ease. By the end of this video today, you will understand the tax rules that you need to follow to file correctly for your business, and you'll know exactly what to do with that 1099. Stick around to hear the biggest misconception regarding tax forms in 2023 so you don't believe the myth and make that mistake. So let's chat 1099s. You might have gotten this form in the mail recently, or maybe you got a digital copy landing in your inbox. You might be seeing it for the first time this year and be like, what the heck is this? I've never seen it before. I've never gotten one before. Why do I have it? You might have been hearing rumblings about the IRS changing some rules about who receives what this year when it comes to 1099s. I've also seen frantic Facebook posts from people saying things like, now my eBay sales are taxable, or my Facebook Marketplace sales have to be reported, or they're starting to tax my PayPal stuff, etc., etc. So the real truth, y'all, that stuff was always subject to tax. Let's get to the facts behind this particular topic and clear up that myth for you. The rules regarding 1099s have changed recently. Before I dive into that, I want to make sure we know exactly what a 1099 even is. Now, there's different types of 1099 forms. Today, I'm explaining the 1099-K specifically. A 1099-K is an informational form that third-party payment processors are required to send you if you've received payments from them from processing payments on your behalf. So these payment processors are platforms like Etsy, PayPal, Stripe, Shopify, Amazon, etc. If they process money for you on the internet or even off the internet, chances are they're a third-party payment processor. All of those platforms are accepting and processing payment on your behalf, and then they're sending the money over to you. The payment processor reports how much gross revenue meaning total sales before any fees are subtracted out, that they processed on your behalf on this form, the 1099-K. That's literally the only number that's on it, your total sales on that platform. No fees, no expenses, no refunds, just total sales processed. The payment processor also is supposed to send a copy of that 1099-K to the IRS. Like I said, it's an informational form. It's giving a heads up to the IRS, the Internal Revenue Service, that you, or really your business, should be claiming or reporting at least that much in revenue somewhere on your tax form. So I want to make it clear, it's not a form that says, hey, now your stuff is subject to tax, you got to pay income taxes on this. Really, it's just a form that says, Janet made $15,000 on Etsy this year. Hey Janet, you made $15K on Etsy. Hey IRS, be on the lookout for Janet to report at least $15K in sales, gross revenue on her taxes. So that's all that the form is saying, your total sales on that platform. One for you, one for the IRS. Got it so far? So prior to 2022, the IRS only required these payment processors to send you and them a 1099-K if you made $20,000 or more in sales on their platform. For tax years 2022 and onward, the IRS has dramatically lowered that threshold from $20,000 to $600. You got that right. Meaning tons more people are going to be getting this form for the first time in 2023 for tax years 2022 and beyond, because you don't get your 2022 form until that year's over, so you're going to get it in early 2023. Now, why did they lower that threshold? We are living in a newer gig economy, right? Where freelancing and self-employment and whatnot is dramatically on the rise. And no surprise, the IRS felt, probably correctly, that too many of us are simply not reporting all of our income. We're not claiming all of the money we're making. So lowering this 1099-K threshold means that more of us are getting notified of our revenue. We're getting what feels like a scary tax form in the mail, and the IRS is also getting notified. They're getting a heads up, and they're now on the lookout that we're reporting it correctly, because too many of us were not reporting it at all. If you're finding this video useful so far, let me know by giving me a thumbs up. Make sure to subscribe to my channel to get notified about more tax updates that apply to you. Now, what does this change mean for you? I want to make it clear, contrary to what many somewhat whiny people on the internet may have been saying, the tax rules did not actually change. Things that weren't previously subject to tax are not now suddenly taxable. That money that you were making online was always subject to tax. It was always reportable. You should have been always claiming it somewhere on your tax forms, whether you made $600, $5,000, or $25,000. The only thing that's changed was who would receive this informational form. They're hoping that by reducing that threshold, tax compliance and tax reporting will improve, and thus the government will make more money, right? I'm also always curious to know if you've seen other people on the internet spreading misinformation about this topic, and if this explanation is helping you make sense of it so far. Let me know in the comments. So what the heck do I actually need to do, Janet? The end goal to be compliant is to make sure that the money reported on any 1099-Ks you receive is included somewhere in your gross revenue on your tax forms. Most of us are probably filling out the form Schedule C for taxes, or we should be, and that's where you usually report your business sales and expenses if you're a sole proprietor or a single member LLC. If you need more help with the Schedule C, check out my step-by-step video on how to file your taxes for your e-commerce business. If you look at line 1 of the Schedule C, this is where you report your gross revenue. The amount here should be equal to or greater than the sum of all the 1099-Ks you receive this year. If that amount on line 1 is less than the sum of your 1099-Ks, that will be a big old giant red flag to the IRS that you aren't reporting all of your revenue. So it needs to be claimed somewhere on your tax form. But don't be alarmed. You are not taxed on your gross sales. You need to report them, you need to claim them, but that's not necessarily what you owe taxes on. You still get to reduce your gross revenue by your business deductions or your expenses, right? And then you calculate your net profit, which is the number that really matters when it comes to calculating how much income tax you owe. That means it's important to keep up with your books. Make sure you're still recording your sales and expense transactions in a bookkeeping system somewhere. Don't think that just because all these platforms are now responsible for sending you that 1099-K at year end, you don't have to keep track of your numbers yourself. There's two important reasons for that. The 1099-K will not include any fees or expenses you pay over to that platform all year. You need to be tracking those fees and expenses yourself so that you know how much you get to deduct. Not to mention, you have other fees and expenses that you want to be tracking for your books. Things like shipping labels, sales tax paid, processing fees, advertising fees, your contract labor, supply costs, all that other stuff needs to be tracked somewhere. Second, you want to make sure that you're recording your numbers in your books throughout the year so that you can reconcile or match your sales totals to the sales totals on your 1099-K. 1099-Ks are not always correct. There have been many instances where platforms send out inaccurate 1099-Ks and they end up needing to amend them. The only way you will know if it's not accurate is if you have a number to compare it against, if you've been keeping track of your sales in your own bookkeeping system. I highly suspect that since this is the first year with this dramatically lowered threshold, we're going to see lots of kinks in the system and 1099-Ks doing weird things, and they may not always be accurate on the first send out. If you weren't prepared to report those sales or file taxes for your online shop, now is the time to get up to speed on those requirements. You don't want to wait until you receive that 1099-K in the mail and freak out and have to backtrack and figure all this stuff out in a rush before the tax deadline. Receiving that 1099-K for the first time is going to mean that a lot of sellers are scrambling to figure out their bigger tax picture for their business for the very first time and make sure they're doing things properly. So if you're ready to understand your financial and tax responsibilities as an online seller, if you've got questions, make sure you check out my free workshop, When to Worry About Taxes as an Online Seller. You can sign up to watch it for free right here. I also have bookkeeping templates if you want to make sure that you're tracking your sales and expenses properly for tax time. For more information on my templates, check out my video, The No-Brainer Bookkeeping Solution for E-commerce Sellers.